Every morning I get up, and one of the scripts, Python scripts I've been running recently, is to run all the active listings and look for listings that have dropped their price for at least a second time. So not the first time, it's not the price changes on the hot sheets for realtors who watch this, but if they've dropped their price a second time. And of course, dropping your price twice on December 20th, not exactly a good sign, right? So I was looking for price drops and I came across this right here. Now, what's interesting about this, you may just look at like, oh, there's quite a few on there. There's 61, not a ton, but this was only for like a day. So it is kind of a lot for December 19th or 18th when I ran it. But you see this 10 down here? I zoomed in on this. I was like, what's going on down here? And that's when I came across these new builds, 184 a foot, 469, and they dropped their price $40,000. Now, immediately I texted one of my buddies and I showed him like this against the exact same square footage in that neighborhood, showing that these are much, much lower than some that were going on before. But there are neighborhoods all over Nashville where prices are dropping dramatically. They're not necessarily going to get picked up by the median price. This is why I'm not a huge fan of the median price anyway, although I share it because, I don't know, people want to know about it. Before we even get there, before I even show you these crazy neighborhoods, listen to what Jerome Powell said. If you are betting on mortgage rates to drop, let's take a listen.
Once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations.
Isn't that wild? He has no idea. They have no idea where inflation is going to be. They have no idea. And the inflation is the most important factor for your mortgage rate. That's why mortgage rates just hit a new high since, I guess you have to go back to June, July, early July to see this high. Of course, they bumped up for like one day when Trump got elected. But let me tell you the most important chart. If you are following this and you want to know the most important chart for 2025, it's this right here. People, you want my forecast? I don't like forecasting because I don't feel like it's really that helpful. And I feel like it can be misleading. And if you were to make a judgment call on it, I just don't want you to do that. I want you to be smart about how you buy, which means I'm much more interested in the left side of the equation than the right side. But if you want to know what I think, this chart right here, 30-year fixed rate mortgage year over year. So just click that. If you're on Fred, click that edit the graph, change from a year ago, and you can see year over year. Notice that it started going year over year above in September of 2021, finally hit a restrictive level. Things slowed down dramatically, and then it started coming down. Again, this is year over year change. It's not the mortgage rate. But in July, it went year over year negative for the first time. And then in September, that's when demand just really skyrocketed. And guess what? Now we're year over year positive again. This year over year positive is going to be dramatic headwind for next year. So it doesn't matter where interest rates were relative to last week or last month. It doesn't matter if they're higher or lower. What matters is, was it higher or lower than a year ago? That's going to tell you whether or not there's more or less demand coming up. And the fact that it's year over year positive tells me that demand is going to be down for Q1. At least that's what we're on track for. Of course, it could change. That's why we're going to watch this chart. The crazy part about that is we have an area, it's teeing up really bad. Year over year active listings up 16%. Again, almost 1,000 more than where they were last year. There's a lot of good deals out there. I know you think, Ethan, there's not good deals. I'm talking about, I was in conversation with someone that was selling their property for 30% less than what they bought it for a year ago. And I'm not talking about a bad property. This was in a great location. It's a nice property, but it is a property type that people don't want. Look at this under contract though. Contract volume starting to drop back down to the lows of last year. Of course, it's the week before Christmas. Not surprising there, but here's what is surprising. Davidson County, now this is the urban core. This is the urban core of Nashville, is flat to negative on contract volume. This is with mortgage rates going year over year positive. If there was ever a massive risk to prices, it is sitting in Davidson County. If you want to know where the deals are right now, where the prices are getting really soft, where you can offer much less than ask, it's in Davidson County. I'm noticing luxury getting really soft. I'm talking about 10 and 20% off of list. I'm seeing HPRs that are $1 million or more are high risk for massive repricing, okay? HPRs, massive repricing, high risk. Those are actually attractive to me if you can just, you find one you like, but nobody wants to share a driveway and pay $1 million. Davidson County active listings right now are 24% higher than what they were a year ago. Davidson County has more active listings than they had in 2018. I think we're back to 2017, 2016. I'm not even sure, but years and years and years. And their contract volume is still a 30% from where it used to be. Davidson County has major problems going into 2025. New build neighborhoods that are a disaster. Let's talk about this one. This is in Gallatin, right outside of Gallatin, in between Hendersonville and Gallatin, Harbor Crossing. Okay, these are 1656 townhouses, and you can see we have sold, there's 30 of them. I think we have 8 or 9 still for sale. But you go back to last year, 360, 362, 358, 345, 343, 347. And the later you get, the lower it goes. Now, I've charted this because I'm a nerd. So this is what it looks like from a chart perspective. Sales price, these are all the exact same price per square foot, so it's not gonna make a difference. But sales price, you can see the first 5, they did great. They got another one at 358 on March, 358 in June. But look at all these. They started dropping their prices, and then boom, the next high was in September at 344. And then boom, the next high was 335 in November. And they got as low. Look at the lows now. They're selling these townhouses, these exact same units, 320, 315, 300. That is a disaster. It's not the only one. Let's go to my neighborhood tracker here, which, by the way, I've got almost 500 neighborhoods in here now. 500 neighborhoods tracking. I'm going to start reporting results based on the neighborhood tracker because the truth is, when you say prices are at an all-time high, it's only in certain neighborhoods. That means that there's still almost half neighborhoods that don't have all-time highs. It's kind of misleading to say you're at an all-time high. This is where Harbor Crossing was. You can see it. You can see it on here. Active listings, price drops. You can see that the price has been dropping steadily and that those townhouses are really taking over here. You can change this to property subtype. There we go. Look at that. So really putting pressure on that neighborhood area there. Let's go to another one. Pretty sure there's one in Lebanon that I was looking at. Okay, see this neighborhood right here? This neighborhood is hot. This is Villages of Hunter Point. You can see it hit an all-time high in Q2 of 2024 with a median of 225. And I know a lot of these are new builds. So let me see if I can find built info. Yeah, these are all new builds, but look at this. You can see it starting to bend right here. New, and then it starts dropping right here. Look at that. It's dropping. And so you can see even in this neighborhood, even though they've been strong, it looks to me like they're caving. And let's see if you can find, 2511. They were going for 460 at 183 a foot. Now they're selling them at 414 at 165 a foot. That's a 2511 square feet. Let's just look for that property. Let's do 2511 and see if we can find what this is. That is so bad. There it is. And you can see, look at that, 420. Wow. So there's one that's tanking. So there's a new build fire sale. You can see, look at that bending down. That's pretty wild. Now let's go down here and let's look at the one that I was looking at before where I was like, what in the world is going on? Is this it? I think this is it, Saddle Grove. Let's just focus on the new here. Yeah, look at that. So the floor on the new was 166 price per foot, and now they have one listed for 163 price per foot. It's a townhouse, but nonetheless, you're talking about going back. There's a 165. You got to go back to 2022 to get a 158. But really, I mean, you're going back to 2021 prices, the summer of 2021 prices on some of these. I'm telling you, it's here. There are crashes happening in neighborhoods in Nashville. It is pretty wild. It's not everywhere, but there are some new builds that are just absolutely dumping. Look at that. It's Troubadour. Troubadour's like a $10 million neighborhood. I mean, like, price trend. Look at that. 10 for sale, none under contract. Yeah, it looks like most of them sell for about $4 million. That's wild. Let's see if there's one in Murray. I think there's one in Murray. Someone mentioned this one right here, Harvest Point. Harvest Point, lots of listings, lots of price cuts. You come down here and you can see the floor is starting to bend down at the tops. You're getting lower highs, lower lows. It's kind of a sign that things are not going too well. Let's see if they're all new. And you can see the new builds are putting a lot of pressure at 200 a foot. And then you overlay existings have to go below 200 a foot. And that's where you're getting, look at that. Ewell Avenue, 180 a foot. Ewell Avenue, I've seen a couple on there that are actually assumable if you're a veteran. These would be good. I mean, this is a perfect example. Everything that's red is a seller's market. Everything that's green is a buyer's market. If you buy where it's green and sell it when it's red, chances are you're going to do way better than average. So in my opinion, it doesn't matter where prices are. It matters, can you afford the home? And are you buying in a buyer's market or are you buying in a seller's market? Okay. And if you're buying in a buyer's market, you should be able to be more aggressive on what you ask for and then wait for it to be a seller's market. If it's an attractive area, it will eventually be a seller's market. You just got to wait, give it time, make it years, and you will be able to really, really win. Now, that being said, I fully expect inventory to, especially with mortgage rates, to go up a lot next year if mortgage rates stay high. If they stay high, we're going to have a very soft spring along with massive inventory build. And, it's what I'm curious about is if sellers can wait another year or if they'll start capitulating. I don't know the answer to that. I don't know the answer. I know we got record canceled and expired. I know that in Davidson County, we have a massive powder keg of inventory. It's just a matter of what people decide to do. It's going to be very interesting. So with that, Merry Christmas. Merry Christmas. Enjoy your time with the holidays with your friends and family. Thanks.